just when you might be starting to feel safe that this crazy wave of layoffs might finally be over in 2024, unfortunately, I have some bad news for you. Because today we're learning that Goldman Sachs is laying off anywhere from 1,300 to 1,800 employees, which will account for about 3 to 4% of the workforce. And we try to cover all of these kind of different topics and all these different companies doing their layoffs as they happen pretty much in real time. So today I want to talk about what's going on at Goldman Sachs, have a couple of different articles. So let's dive into what's behind this massive layoff at Goldman Sachs. Our first article today is from livemint.com, and the headline is Goldman Sachs layoffs, investment bank to cut nearly 1,800 jobs amid annual review process. And all of my articles are listed down in the description below, so you can read the whole thing for yourself. I'm just going to talk about what pertains to our conversation for today. The article goes on to say, the investment bank plans to cut 1,300 to 1,800 jobs, which is 3 to 4% of its total workforce, as part of an annual review process. Goldman Sachs has employed about 45,300 people as of late last year. The report said, job cuts will be in the bank's various divisions. Job cuts have already began and will continue till fall and are a part of the investment bank's annual review process known as a Strategic Resource Assessment, or SRA. Our annual talent reviews are normal, standard, and customary, but otherwise unremarkable, the report said, quoting Tony Fratto, a Goldman spokesperson. Overall headcount at Goldman is expected to be higher at the end of 2024 compared to 2023, he noted. The report stated that Goldman usually aims to cut around 2 to 7% of the total workforce annually on the basis of performance factors. This range has changed over time due to market conditions and the bank's financial outlook. The annual culling process will take account many factors. One such factor is in-office attendance. The bank and its peers had relaxed this rule during the pandemic. But now banks are getting strict on employees who do not come to the office, the report said. Other banks, such as JP Morgan and Citigroup, have similar measures to remove underperformers each year. Goldman had discontinued its SRA program during the pandemic at a time when deal-making had hit record levels. It continued with the program in 2022. So a couple of things there. When we were talking about Intuit, the makers of TurboTax and QuickBooks and MailChimp, they said 60% of the people they are laying off were due to being underperformers. So here we're also seeing that Goldman Sachs is looking to eliminate their underperformers as well as they view them. And if it didn't feel hopeless before, it should really feel hopeless now, because it seems like remote work as we know it is dead. Unless you have an opportunity at a smaller organization or a startup that values remote first, where all the different founders are located in different states and they intentionally want people to be located wherever is best for them, it doesn't seem like you're getting remote jobs anymore. Which is really, really frustrating for someone who had a remote job during the pandemic, and I did much better at that job. You know, I performed well, I made sure I was in all my meetings, my camera was always on, and also it saved a lot of stress and anxiety of commuting to the office, especially in South Florida, where with traffic, I mean, those commutes could be an hour each way. And it didn't make any sense because I could just roll out of bed. I mean, I'm not working out in pajamas. I mean, you get dressed for the meetings, right? But like, you essentially roll out of bed and you can start working. So it's much easier to start working at 6:37 in the morning when you work at home as opposed to trying to get into the office, right? So they would definitely lose a couple hours of productivity from commuting to the office, commuting home, lunch breaks when you could just sit at home and just make a sandwich or whatever you need to do, and definitely put in your proper 8 hours or whatever each and every day. But to me, it really doesn't seem like productivity. And sure, there could be some employees who take advantage of the system, who are not good at remote working. Then let those people go. Those should be the underperformers, right? As opposed to people who are just doing well in a remote environment. Oh, I don't care how you're working or what's best for you. We just need you in office so we can look at you, stare into your beautiful eyes, and smell your cologne. It's really crazy that so many people, if not everybody, was working remote during the pandemic. And now all of a sudden, it's like you're just lazy, you're not doing anything, and there's no possible way you could be getting your job done from home. And it just shows like you cannot trust any of these employers, because if you go back and watch interviews, we saw multiple CEOs say, yeah, we got to adjust, and I think that remote work is going well for us, and blah, 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 blah. And now it's like, oh, remote work's terrible. If you want to work remote, you're gonna lose your job. I mean, Zoom doesn't let you work from home anymore. Dell doesn't want you to work from home anymore. Like, it doesn't really matter what kind of office, what kind of work you're doing. It seems like even if you can do your job from home, they don't want you to. And I understand the argument of some jobs cannot be done remotely, but that's not what we're talking about. If you're an open heart surgeon, yes, you need to go into the office. If you need to, pack pallets in a warehouse or unstock things at a retail store, okay. If you are a cashier, sure. I mean, there's plenty of jobs that you can't do remote, but in the IT world, there's a lot of jobs that you can do remotely. And for me, for like 10 of the 15 years I worked in IT, it was going through all that stress of getting to the office in the first place, and then having to just sit on a computer all day and talk to my entire team who is already in India. But I guess now if they are going to have someone remote, as we've gone over a few times now, their remote workers are just going to be people from other countries who get paid a lot less. Now, when it comes to leadership and some other critical thinking and sales and people management, I mean, I don't think that you should try to outsource those to another country. I mean, I believe that I had unique skills and unique talents, and people around me did as well, but these companies are willing to sacrifice quality if they're able to save a bunch of money. And the luxury, I guess, of working from home is completely off the table. That is not a perk that any of these companies want to offer any longer. According to the report, Goldman reported a 21% increase in investment banking revenue in the second quarter of 2024, compared with a year ago. The bank also reported a 27% rise in revenue in its asset and wealth management business. From what we're seeing, we are in the early innings of a capital markets and M&A recovery. The report quoted Goldman Chief Executive David Solomon's statement on a call with analysts. Our next article is from the Business Standard, and the headline is Goldman Sachs to lay off up to 1,800 employees amid annual review process. And the article says similar things to what we've already covered, but then also goes on to say the report also highlighted that similar workforce adjustments are common across major banks, which routinely trim underperforming staff to manage costs in a challenging economic environment. In the first quarter of this year, the largest U.S. banks collectively cut over 5,000 jobs, with Citigroup leading the reductions by eliminating 2,000 positions. So for these companies talking about underperformers, I'm really curious as to how do they get to that assumption. Is it that they are written up on a performance improvement plan, which we've talked about previously, and how that can be completely misleading? Is it that they're in sales and their stats are lowered? I mean, this is from various different divisions. So what kind of grading criteria do they have? Are they going to the managers and saying on a scale of 1 to 10, how incompetent are your employees? Like, how do they determine the underperformers at the organizations? I'm really curious to know. Outside of sales, where there's exact measurements, like how do you determine if a business analyst is underperforming? How do you determine if a software engineer is underperforming? Just looking at their velocity and their burn down charts. I mean, it's really kind of interesting how they would even come up with a list of true underperformers. The article says, historically, Goldman Sachs' annual review process has led to workforce reductions ranging from 2 to 7%, depending on the bank's financial performance and market conditions. In a related development, Goldman Sachs recently lowered its probability of a U.S. recession from 25% to 20%, citing positive retail sales figures and improving unemployment claims data. The bank's economists suggest that a strong jobs report expected on September 6 could further reduce its recession risk to 15%, where it had been prior to a recent revision. And I don't know, if you're talking about how good the economy is doing, how good things are doing, and you're an investment bank, well, if you're going through layoffs and you every year are having to lay off people, then doesn't seem like the economy would be in a good position, right? Shouldn't you try to be like growing, hiring more employees so you can get more done, you can do more innovative things, you can take on more clients? Having to quote unquote trim the fat each and every year doesn't sound like something that you'd have to be doing in a booming economy. Our next article is from Reuters, and the headline is Goldman to lay off a few hundred employees in annual talent review, sources say. And as of the filming of this video, this was 3 days ago as compared to 1 day ago of the previous two articles. So it started off with maybe just a few hundred, and now we know it could be as much as 1,800, depending on the overall percentage they go with. The article says Goldman Sachs is planning to cut a few hundred jobs as part of an annual review process aimed at lower performers. A person familiar with the matter told Reuters on Friday. And yeah, maybe you guys are following Goldman Sachs a lot better than I am, but it just seems like it wouldn't be such breaking news if this happened each and every year. I mean, they can call it an annual review process, but I don't know, maybe it's also with everything going on, we're taking note of every single layoff. It doesn't seem like this is the kind of thing that does happen every year, but I'm probably wrong. The investment bank reinstated performance-related cuts in 2022 after halting it for 2 years due to the pandemic. Last year, the exercise reportedly resulted in 1% to 5% of Goldman Sachs employees losing their jobs. Over the years, the cuts done under Goldman's strategic resource assessment has fluctuated based on market conditions and its financial outlook. The bank's global workforce stood at 44,300 as of a quarter ended June 30. It took on multiple rounds of workforce reductions in 2023 as deal-making suffered and higher for longer interest rates weighed in on the macroeconomic outlook. So if you're doing these reviews and you're calling them annual reductions in force or whatever you're calling them, but they're happening on an annual basis, I'm assuming that means once a year, not multiple times each year, then why are you also doing multiple rounds of workforce reductions in 2023? If everything is fine, then why are you doing all of those rounds? Okay, I'll buy into the fact that each and every year you lay off between 2 to 7% of your workforce. Okay, even if we accept that, okay, in addition to that, you shouldn't have additional layoffs. It should just be trimming the fat, quote unquote, letting go of the underperforming employees. You do that once a year and then you're good. You shouldn't have multiple rounds of additional layoffs on top of that and then talk about how we're not anywhere close to recession, the probability of recession's going down. I mean, this kind of stuff just doesn't add up. The article goes on to say, the operating environment for banks has since improved, with Goldman reporting second quarter profit that more than doubled in July on strong debt underwriting and fixed income trading. The resilience of the U.S. economy has given corporate executives the confidence to pursue deals, debt sales, and stock offerings. But despite an industry-wide recovery, deal-making activity has remained below historical averages. Or maybe, just maybe, the economy is actually not in a good position and you don't want to believe the data of activity being below historical averages. So it seems more likely that the economy is not doing well based off of these low historic averages of deal making, as opposed to just saying everything's fine and having no numbers to back that up. Goldman shares turned positive in afternoon trading and closed 0.6% higher. The stock has surged 32% this year and has outperformed the broader markets as well as index tracking rival large cap banks. Earlier in the day, a Wall Street Journal report said the layoffs that have already begun will continue through the fall and may impact more than 1,300 employees, or 3 to 4% of its workforce. Goldman, however, said in its statement to Reuters that the numbers reported by the journal were not accurate. So if you believe the official reports from Goldman Sachs, everything is fine. Where the risk of recession is going down, their annual layoffs are just that, they're just house cleaning, they're only getting rid of the underperformers. But then if you actually look into the proper data, you see that they may be getting rid of people on an annual basis, but still, they had multiple rounds of layoffs in 2023. I mean, that's not a good thing. So if you were to work at Goldman Sachs, would you feel really comfortable knowing that last year there was multiple rounds of layoffs? Would you feel comfortable knowing that if you somehow, some way end up in the underperforming bucket, similar to working at Intuit, that you could be let go? And that they think it's perfectly normal to lay off anywhere between 2 and 7% of their workforce each and every year across various departments. So there's not even one particular department that may be safe. And you don't really know how you end up on the underperformer list. And you 100% know that you're not going to be allowed to do your job remotely. So that's out the window too. So if Goldman Sachs is your dream company and that is a place that you want to work for and that's going to make all your dreams come true, go for it. But if you have any other options, Goldman Sachs might be a place that you want to stay away from when it comes to looking for a new job in 2024. Talk to you later.